Hi, I'm Jim Jubak, and welcome to my YouTube video. This is April 1st, but this is not an April Fool's video. If you like this video, you can give it a thumbs up, like it. If you want to subscribe to YouTube, that means you then, to my channel on YouTube, this means you then get notification for when the next video goes up. Please do subscribe. You can find more of my stuff for free on jubakpicks.com. That's my free site. My subscription site is jubakam.com. It's got more portfolios, 6 as opposed to 3, more picks, more commentary, we do some option stuff, so a lot more stuff for your subscription price. So you can check those two things out. The subject today is 3 stock picks for earnings season. What that requires us to do is to get inside Wall Street's head. One of the things I noticed when I opened my email this morning is I had an email alert from Seeking Alpha that said, hey, revenue in Macau, the big Chinese gaming city, was up 58% in March. Now, it noted that this was March comparison to March a year ago. March a year ago was just terrible. And we've had in between, we've had things like, we've had a complete clampdown on travel to Macau during the Lunar New Year festival. So if you look at this, there are really 2 things being said here. One is that revenue is up 58% year to year. Great news, but this is a number that we really shouldn't put much credence in because it is a sort of statistical artifact of the year where the comparison works. Now, Wall Street knows this, but I think that my experience with Wall Street, which is 20, 30 years now, is that for the short term, that is for the next earnings season, and earnings season starts, we start to get reports for first quarter of 2021 around the 14th and 15th of April when Citigroup and Wells Fargo and JP Morgan and Bank of America all start to report earnings. The big banks now sort of kick off earnings season. That for earnings season itself, for the reaction to that, Wall Street isn't going to pay much attention to the caveat. It's not going to pay attention to the year-over-year comparison. It's going to pay attention to the big jump. And if you want to look at stocks to buy for this period, you really ought to be looking for stocks that are going to show a big increase. So let's look at some charts. First stock we're going to look at is MGM Resorts International. And MGM really is very interesting in this kind of psychology because MGM, is the big owner of casinos and hotel rooms on the Las Vegas Strip, which has been really heavily hurt by the pandemic. So you have a big drop in earnings and revenue, but these are all starting to come back as Wall Street anticipates a reopening of Las Vegas. We're about 50% capacity. We're going to go to more. So you see the stock has been anticipating that. But one of the things that's interesting is the stock is only up about 20.5% year to date. We're going to see lots of really big year-to-year news. The one that I think is actually going to be most important for MGM, and let's see, MGM reports on the 29th of April, so they report first quarter earnings. But one of the things about the year-to-year comparison is that China has a second big holiday festival called Golden Week. The last festival for the Lunar New Year, the government said don't travel to Macau. This week it looks like they're going to lift that ban and we'll have travel. So what you're going to get is a report at the end of April that looks forward to better business in Macau, better business in Las Vegas. I think the stock will move up from here. This is a stock that I own in my Jubak Picks portfolio. Okay, second stock to look at, let's see if I can find it here, is a stock called Restaurant Brands International. Ticker is, strangely enough, QSR. They own Tim Hortons, the once Canadian and now sort of international coffee shop chain. They also own Burger King, but the most important thing that they own is Popeyes, because Popeyes is just was a very limited franchise. It had a big breakout with the success of its fried chicken sandwich, and is now going international. So we've got news that they're going to expand into the UK and Mexico, and the big prize, of course, is China. So the stock is up only about 7.25% in 2021. We're going to get a big change, and here's a way to look at this. So in 2019, which was the first year before the pandemic, revenue ran at about $5.6 billion. In 2020, big pandemic year, revenue dropped from 5.6 billion to 5 billion. That's about what, 11-12% drop. So for the second quarter, it looks like the second quarter, which is the June quarter, is going to be the low for revenue for the year and earnings for the year. Wall Street right now is saying $1.05 per share in earnings. This quarter, it looks like we're going to see $1.23. So again, the company's going to report. It's going to say, hey, year-to-year comparison looks pretty good. It's also going to say that they think the bottom is going to come in June. This is also a stock that pays a 3.26% dividend right now. And it also is owned I also own it in one of my online portfolios, Jubak Picks. Last one we're going to look at, and this was almost this chart was written for this story. Okay, this is a stock called Wyndham Hotels and Resorts. They're a huge, one of the top 4 global hotel franchises. What's really interesting right now is that they have a predominant slant toward the middle of the market. So it's middle market hotels, which are going to see more individual traffic return faster than business traffic. So here we're looking at the first quarter of 2020. We saw earnings drop to a nickel a share. Forecast for the first quarter of 2021 is 24 cents. You're going to see this pop already. And then going forward, we're still looking at much better year-to-year comparisons. This is one where I think you're going to get the year-to-year comparison really early this quarter in results rather than having to look forward to next quarter. So this is one that you might want to own right now. You notice the stock has, of course, been going up. It's not like this stuff is a secret, but I still think we're looking at we've got about an 18% gain year to date. I think there's more pop coming from the first quarter earnings report. So we'll get the pop here, and I think we'll move up further. So these are the 3 that I'd look for in terms of earnings season action. All 3 of them are in my portfolio. Wyndham Hotels is one that I've added to my Jubak Picks portfolio relatively recently. It hasn't moved up much since then, so you're really not paying any extra than when I picked. But these are the 3 that I would look at. And of course, you can always find more of my stuff on JubakPicks.com. That's the free site. JubakAM.com is the subscription site where you get more portfolios, etc. If you go to JubakPicks.com and actually sign up with your email, we will send you free email alerts go into your mailbox around 8 o'clock at night. And you won't have to do anything. You just sit there, relax, put your feet up, pet the dog, and read my posts. This is Jim Jubak. Thanks very much for watching. And please don't forget to like, thumbs up, and subscribe.